Hi, this is Ilham. I'm a option trader. Today is January 15, 2026, and the time is 4:17 p.m. Japan time. As usual, I'd like to briefly walk through the market today. The Nikkei Nikko closed at 54221, and about a week ago, when I last recorded, it was around 51000 point. So we are looking at the move of roughly 3,000 points in a week, which is quite significant. One of the major drivers is the news around dissolution of the lower house, which triggered strong buying in Japanese equities. On top of that, startup test mining for rare earths seems to be another factor the market is reacting to. Although the market feels very strong. Personally, I think this timing for dissolution actually makes sense, and I'll come back to that political angle a bit later. On volatility, give the equity rally, VIX is at around 530.25. At the same time, the market is trading at PL level in the low 20s, which again tell you how strong the risk appetite is right now. Looking at the bonds, Japan's 30 yield has risen to around 3.5%, and the weak yen trend continues. At some point, would not be surprised if USD JPY starts testing the 160 level. Taken together, this really feels like a classic election-driven market, and the strategy is quite striking. Up until recently, I had been viewing the market as range bound, but we are now clearly blocking above the 52000 level, and we are sitting in the 54000. And that's it. The question of whether this turns into a hurry towards 60000 is something I remain skeptical about. I think we still need to watch the market carefully, especially in terms of how much unrealized profit has built up and where positioning really sits. So for Japan, the key is not chasing, but being patient about when and when to put risk on. In the US, the S&P is at around 6927. Compared to Japan, US momentum feels weaker. It's not outright negative, but it doesn't feels more like a thin and sideways market. There's a noticeable temperature gap between Japan and the US, with ongoing headlines around Trump tariffs and uncertainty ahead of the midterm elections. The US market still feels somewhat crowded. Some of that capital may be rotating from the US into the Japan, at least for now. Gold is trading around $4620 and it remains very strong. GBZ is to 3.57, which supports that view. Bitcoin is back to around $96000, recovering nicely from the recent pullback. Looking at the market as a well, this really is environment where Japanese equities are standing out for this range, largely driven by the election narrative. Okay, let me talk a bit about the lower house election. Earlier back in November or early December, I mentioned that if an election were to happen, it would likely be December or shortly after the budget was passed. Now we are looking at the February 5 election. Seasonally, February is not ideal for the voter turnout given the cold weather. But considering the high approval rating of the current administration, it makes sense for the ruling party to move early. From my perspective, this is actually very well timed. Reports suggest the decision has already have been communicated to senior ruling party officials. So the key question now is what kind of a mandate this election is meant to secure. In the market, so-called pro-administration names along with the little stocks such as rare earths have been particularly strong. Since the ruling party is currently in a minority position, the real objective is to regain a majority and stabilize governance for a close 4-year term as possible. When approval rating are high, acting early rational, you don't wait for uncertainty to creep up. Some argue that election create political vacuum, but realistically, we are not in the middle of the immediate crisis right now. If we are facing something like a full-scale Taiwan contingency or serious escalation between the U.S. and Venezuela, election would not even be possible. Given that holding it now may actually be the better long-term decision for Japan. From market perspective, the equity strength could last through mid-February until the election is over. What really matters is what happens after that. In my own model, a price has clearly broke out of its range, but it does not yet suggest a phase of aggressive multiple expression. So while the rally is real, whether it becomes an unsustained, explosive move is something I want to judge carefully over time. By watching how the models evolve and how the market digests this event, I want to be very deliberate about when to put positions on in 2026. That's my current market view. Thank you for listening today. If you like this kind of perspective, think about the long put my contents and feel free to follow. See you tomorrow.